Hey traders, Raghee here, and in this video we're going to cover a number of entries, futures related entries. It's really going to expand, what I want to do here is expand your kind of definition of what it means to be a futures trader. We talked about the E-mini micros just the other day. Now let's talk about some stocks that have a lot of impact on the larger averages and how we've been playing some of those here in the futures room. So we had the pit bull low, and this was something we brought up and it was part of the setup, which was the second Thursday and Friday of the month, going into the last the last day of this week, the third Friday of the month, and being bullish coming into this options expiration that's going to happen tomorrow. And even though Monday certainly was a heck of a day for a lot of bulls, including myself, the way in which we positioned ourselves, and this is a number of the alerts we sent out today, but this was the key one that really, as we've been preparing for going into the latter part of this week and into the expiration, we want to start taking profits on those positions that we have built already. And these are all actually June 21 expirations, and you can see the strikes and the calls that we were looking at. And these price targets are so we have price targets or price triggers to actually buy these calls. That was the first leg of the alerts. Different price triggers alert us to start what I call shopping for certain strike calls. And that's what we have. Now we have the other side of this, the more fun side of this, which is the price targets are now triggering our scaling out of some of these positions. So it's not a matter of getting flat. Simply pay yourself, as we say in the room, while you can, not when you have to. That's a big thing that we talk about here in the room. It's not about maximizing and getting to the very top. Who does that consistently throughout a career? Nobody, but you want to pay yourself while you can, not when you have to, based on certain criteria. Let's talk about some of these criteria as we look at the charts. So starting off with two of our favorites, Microsoft and Visa here. Both these were relative performance leaders. That's really the number one thing to talk about here. These are relative performance leaders, and so I'll talk in a moment about how we look at those, but this was the zone that we bought in down in here, and then as we take out the value area high of the month, we're scaling out. Now I don't know if we keep going higher. I really don't. I'd like to think that we do, but I want to pay myself into the last day of the week on what's been, generally speaking, a good recovery from Monday. And again, I want to pay myself in a situation where I have two daily price movement range days. These are 68% probability movement days. So these are both days that would certainly merit paying yourself, but we've also hit a price target up here at the value area high of the month, which is a price and volume study from my recent sonar, submarket sonar, finding the submarket trends of any market class. Okay, so that's another tool that we use. They're all automatically drawn. There's nothing you need to look at for analyze. Just, do we hit the level? Do you believe it's going to be resistance? Yes or no? And then it becomes a terrific target to play into. So let's talk a little bit about relative performance for a moment. So this view is how I gauge relative performance. These, by the way, are free tools that we make available to members. This is a study we call the JT Trend, after the member who actually used my work and said, you know what, I can automate this stuff for the gang. I said, fantastic. That's what I love about the gang over at Simpler Futures. We are here to lock arms with you. We develop tools, we share them with one another, and this is just one of them. Again, based on my work, and I'm so proud of our members for doing this kind of legwork. I mean, that's just the kind of community we have. The 81321 is a way of looking at the propulsion dot exponential moving averages to see what kind of organization we have for them. This is when they're stacked in the proper way. So if you're looking for a stacked environment, something like that right there, or what seems to be a negatively stacked environment in here, this is a great way to understand what those moving averages are doing, automates it, gives you a reading as to bearish or bullish on the way in which you would interpret the stacking of those moving averages, what I call the propulsion.EMAs. The wave is stepping back and looking at the overall market trend. And so you'll notice why I'm so fond of Microsoft. You know, we have a Facebook that's fairly neutral. Amazon's neutral. Near term stacked EMAs are neutral, negative, but this was an oversold buy, and so that sideways market fed right into that setup very nicely on actually Google. That was our setup there. So long Microsoft, long Amazon, Facebook, Google, Apple, and the other one was Visa. So this is how we do relative performance in the room. This is how we build that watch list, and this is really where today we have the luxury of starting to pay ourselves going into this third Friday of the month. All right, gang, that's the breakdown for today's video. I'll see you in the next update.